So they're coming after your cash ISA. So remember that £20,000 allowance you've had for a couple of years now? Well, it seems like that might be slashed down to 5, potentially. And before you panic, yes, I know, it's rather annoying. I actually think it might be a good thing for long-term investors like ourselves. So let me know in the comments if you would still use a cash ISA, certainly provided by your bank, if it was only £5,000 allowance. Also, hit the like button if you've ever opened up a cash ISA too. Now, a couple of months ago, about a month ago-ish, there was rumours about a bit of a shake-up. That ISAs will be simplified and changed, and this has been a part of the rumour mill for a long, long time. It's kind of just been confirmed. I will talk about it. So Rachel Reeves is going to be expected on the 15th of July to announce that there will be a big, big change in the cash ISA allowance from 20k down to potentially 5k per year. But as I say, the overall ISA limit overall is going to remain the same. So that basically means your stocks and shares ISA will stay the same. But in terms of cash, we need to talk about it in more detail, obviously, because there's a lot of elements we need to talk about in terms of numbers and the data. But for me, I was expecting stuff like this. And already there's a big emphasis on billions of pounds. Billions, right? 300 sat in some sort of pot of whatever, not earning enough. And that could well be shifted the focus onto the stocks and shares ISA, which I will come on to in more detail because I think it's important to note. But for one reason or another, we have to talk about the ISA package, let's be honest. It's too complicated. There's too many of them. It's weird in certain ways of how many we've got. We need to simplify it. And I think this is one step to making it more simple and allowing people to basically benefit from the market itself, which could do well off the back of this, in my opinion, because there's more money opportunity there. The thing is, the £5,000 kind of level, people think it's low, but ultimately, in terms of the average investor, some people don't even hit that with cash. So that's a point that you need to keep in your head. But what I've done here is I've highlighted this little bit here. The Treasury are completely focused, I'd say obsessed with the cash side, because there's nearly £500 billion in cash that could be deployed into the economy. And that is a very, very bold statement. And that's the thing. As it stands right now, there's roughly 300 billion in cash ISAs earning peanuts. That's money that's just sitting there doing nothing, literally. And again, you talk about HSBC, Barclays, and all the big banks, they earn a decent penny off that because they are marketed to random retail customers and they're not getting their fair share. If you go on the likes of Monzo, Moneybox, whatever in the UK, you do get a much nicer chunk, which is nice. But as I say, these UK listed companies that are grasping for fresh capital right now, there's not enough people, in my viewpoint, that are genuinely interested in stocks and shares investing, which I understand. But a stocks and shares like ISA are a lot more simplified than they used to be over 10 years ago, for example, right? Because you've got, as I said before, you got the likes of Moneybox, which, as I've said before in one of my previous videos, you can, if you want to, just use one of their funds and it becomes a bit easier and not as daunting. Unlike what I do, individual dividend stocks, which is a lot more of a skill gap, but ultimately there's platforms now, as I've alluded to it, Plum as well, many of them, that have funds where becomes a bit easier. Then you can get the average return of the investment market. But let's talk about the numbers. So the first number is the obvious number here, and it's just on the screen, and I'm going to be rattling out a few numbers randomly, right? But there's 18 million people that hold 300 billion in these cash ISA accounts, which makes sense. But from, 2022, say, there's only 12.4 million adults that have actually genuinely subscribed to an ISA, a cash ISA. But the thing is, around 63% of those people is actually in the cash ISA side. So you can talk about that previous quote about, yeah, well, they are focused on it, obviously, because more people are doing it. But the thing is, there's 50 billion that are funneled into cash ISAs in just 1 year. Fair enough. Not a lot, but it is one of those things. But this is where we got to talk about the obvious in the room. UK businesses and the stocks and shares ISA. Why? Well, only 6% of adults currently, as it stands, 6 are using the stocks and shares ISAs, which is tiny. And I've talked about that in a previous video, and it's unbelievable. And that's the thing. When we talk about where money can go and what you can do with a average return of a fund. And traditionally, 6% in the UK, 10% in other funds as well, depending on what you go for. But as I say, not everyone in the UK is really geared up for investing, which is kind of why people fall down a little bit. And we don't like taking risks, for example, in the UK. That's just kind of the way it is. So yeah, it's getting interesting. There was also, as you can see on the screen here, rumours of a British ISA where this was proposed by Jeremy Hunt. Basically, long story short, they were going to put an extra £5,000 into your ISA allowance if you basically invest in UK stocks only. Now, the ultimate question is this actually bad for savers? Well, some banks and obviously building societies are not going to be very happy with this because ultimately that's where their bread and butter is, mortgages and interest, right? Because if you think about, like, say, Barclays, for example, the interest rates are a lot lower versus, say, Monzo or Moneybox, Plum, other services available, because they basically have that base rate and they cut a lot out of it and they take a lot of the profit themselves, right? But you could argue, yes, it could be punishing cautious savers, especially older people who don't want to have that investment risk. But you'd argue they probably should already have a pension and other things like that. And you got to remember, pensions, most of them are put in money markets. So it's a little bit different, just packaged in a different way, obviously. So there is concern here a little bit about people moving their money from a non-cash ISA, which is stable, into a potential stocks and shares ISA, which I fully get. But the thing is, let's be perfectly honest here, most people don't max out the 20k allocation anyways. And the 5k in cash ISA is still plenty for an emergency fund, obviously. But as I say, if you've got more and you're in a better position, you may want to save more. And you don't want to get taxed at the other side. And there is obviously personal allowance taxes around investment and interest, etc. But ultimately, you may actually do okay in a non-ISA account if there's not bags of money in there, because that interest rate will probably be quite hard to hit, even if you are not hitting those thresholds of 5k every single year, if you could get over that limit, for example. So you could, if you're talking about saving 5k a year in an ISA and then whatever's extra into a general saving fund, you may not hit that level that quickly anyways. But as I say, we go back to that number. Is it bad for savers? Could be a net gain for investors. As I said before, 6% of UK adults have a stocks and shares ISA. Shockingly low number, especially as a financial regulator believes 4.2 million consumers hold more than 10,000 investable assets mostly. Bloody shit, isn't it? But what is mad, I am from the cryptocurrency industry and I've seen a lot of young people fly their money into stuff like cryptocurrency and random shitty altcoins, but ultimately they will never look at stuff like this. But what is my opinion? You're probably wondering. Well, I think personally it's not a bad thing. I think it's nice that they're trying to evolve it a little bit. And I've highlighted a thing on the screen here about stamp duty. It'd be nice if they remove that too. I'll be honest with you, it'd be great if they did that. It is, you can see, peanuts, and it is, but it may well just help. But it's also the educational barrier. Like, oh my God, stamp duty. Oh my God, tax. Oh my God, ooh, how do I do this? If it is available to buy into a fund with lower fees and no stamp duty, it might well be better. But for me, it may well be an obvious option that there is still a short-term saver option of 5k potential as an allowance, which is fine. It's optional and it's open. But it does nudge people into going long-term, into investing, into a stocks and shares ISA to put more in potentially. And you could argue, yes, stocks and shares ISAs will beat inflation. And I know that is a very, very big stretch, thinking of the long term here, while cash won't, right? You got to think of the obvious in the room here. If you're on a Barclays ISA product, you are not beating inflation, nowhere near. Whereas a traditional kind of fund, S&P 500, the Nasdaq, whatever, you probably will. But may not be talking about the US stocks anymore. We may well be talking about many, many millions going into the UK stock economy, and that might be great for us in the long run. And it may well allow the FTSE 100 to roll and roll and roll uphill. Let me know, what would you do? Let me know in the comments. Would you finally open a stocks and shares ISA because of this? Or will you stick to cash no matter what? And if you're not sure how to kind of make a stocks and shares ISA, let me know if you want a video. I will talk through all the different options and the products and the funds and how they work with fees. And more importantly, the tax element to it, because there is some withholding tax with US stocks. And if you want to see my UK portfolio, it's in the link here.